So, Joseph. What's going on, Joseph?
I'm good, brother. How are
All
you?
right. I'm good. How about yourself?
Sorry?
I'm good. How about yourself?
I'm good also.
Oh, that's good, bro.
I was just doing some back testing. I'm getting lost,
Oh yeah, bro.
So far so good.
Yeah, man. So how's trading going for you? Is it hard? Has it been challenging?
Sorry?
I said, how's trading going for you? Has it been hard? Has it been challenging?
Let me say challenging. Sometimes you're up, sometimes you're down,
Yeah.
You get used to the ups and downs of your feelings, of your emotions.
Right, exactly.
But there's, I think, I don't know, but the spirituality part of me is helping me to keep on. I don't know.
Okay.
They just some.
Yeah, that's good, man. I mean, it's a psychological thing. It can drain you, break you, and that's why I tell people when they trade, man, just do the best you can within your setup.
Sure.
I think the reason why a lot of people lose, because I remember just a couple of weeks ago I lost a lot of money because I got overly confident, started raising my lots, and then I'm like, oh, I can still do this. I lost big. Oh, I can still do this. Lost big. Oh, I can still do this. And then I realized, man, like I can trade big like lots. It's just I was over trading. So it wasn't really nothing really wrong with my plan. It was just I was over trading. So like instead of those small hits, I big hits because I got overly confident and I'm like, dang, I got to start back from square one. However, man, sometimes you just got to learn the lesson, bro. I don't know anybody who's like successful who has not like taken big hits like that before and like had to start back from square one. I mean, I've heard a bunch of stories worse than mine, so I'm doing a lot better. I mean, some professional traders, like it took them like 7 years to get to where they're at, and like this is like basically my second year that I'm going on trading. So like, I mean, where I was a year ago was like completely different,
Yeah, sure. Actually, on that part of overconfidence, I think I don't know if I should say it's overconfidence, but when your trading edge is working, you tend to can I say you tend to be confident? Is it I don't want to use overconfidence.
Oh yeah.
You tend to get used to success. You tend to get used to seeing blues in your P&L. So when you see a drawdown, you're like, it's going to come back, and then it doesn't come back. It hits you big,
Oh, and that's why I don't mind drawdown. If size is like at the right size. Like if I don't have my light size on the right size, then I'm going to be very uncomfortable and drawn down because like technically I'm over leveraging, So that's why like I don't mind taking the drawdown as long as it's going in the direction I wanted to go. I'm Gucci. But like for some people who are scalpers, man, and they're so used to seeing blues, like you said, they can't handle drawdown, and like I literally just
open the stop loss.
Yeah, exactly. Like, and like, I even like scalped for like 2 hours yesterday, and dude, I already made like $149, and I mean, I lost 3 trades, but out of those like 7, 8 trades, I believe I took 7 or 8 trades, I won $149. So like, it's all about like your perception of like, how much are you willing to lose and how much are you willing to be in drawdown, so like, I mean, a lot of people say this like 0 drawdown, 1% drawdown, like, dude, drawdown doesn't matter. What really, how much are you willing to be in drawdown, or how much are you willing to lose? That's the question.
That's very correct. I agree with you there. So
yeah.
What are you looking at?
Say that one time.
What are you looking at?
Yeah, so like, look at GU. So GU, man, like, GU has, oh my gosh, did I just delete everything off of GU? I sure did. I do not know why, how or heck did that happen. It's all good. I'll just do it again. Let me make sure this is the right GU. Is this a Wanda GU?
I think there's a way you can undo that.
Let me see something. So pretty sure this is the right one. Oh yeah, that's the right one. Okay, so GU, I'm going to have to just redo it again. GU, it's been on a bullish uptrend the whole time, right? So what I tend to do, bro, is like, okay, so I mean, it's on a bullish uptrend, but I don't even do it like that since it's been creating higher highs, like even more higher highs. I do it like this. I did it like this. And so I never sell GU. I think the only time I sell GU was like I told you, that one time during London right here. I got lucky selling right here. I don't even know why. I think because on a 15-minute 1 hour, like it created an M. I'm like, you know what? I can get in, like catch some pips and get out, So Todd just got back in here. Todd, you can hear me? There goes Todd. Yeah. So what I like to do is if you want to know what I'm looking at now, I know that this is a 4-hour M that was created, right? Now, I don't think this is going to completely drop just yet because, first of all, this second leg is not really a second leg. Yeah. Now, we don't, like Luke said, we don't always need a complete stop hunt to tell that it's going to go in another direction. As long as it's breaking structure and it continues off, then we're heading that, in another direction. But if you look at the monthly time frame, right, or the weekly time frame, right? So I'm looking at the weekly time frame right now, and I see that the market, has to probably come back up here, which it has, right? And even if so, to feel like maybe another certain wick, maybe somewhere in this area, right? But I really think that two things can happen because Biden in America, Biden supports the British pound, right? So maybe another reason why the British pound is so strong. And secondly, the US dollar is losing its value, especially with the next rounds of stimulus check that's coming. The US dollar is still losing its value, right? Which makes it very clear that gold probably go up, which makes it very clear that the British pound US dollar might continue to go up, even though it's creating this, bearish, engulfing candle right here, right? Might even create an evening star at the end of the week, on a daily time frame. So if you look on a daily time frame, you can obviously see even on a 4-hour time frame, there's an M right here on a daily time frame. You don't see any confirmation of just a complete reversal. Now, if it does, it could just do this and then come back up and just keep falling from here. It could do that, just because the simple fact I see 2 daily closes of bearish momentum. However, the reason why I don't believe that's going to happen, especially due to NFP week, I totally believe that it's going to come back up, finish this round off, and then probably do this. Because if you look on a monthly time frame, I mean, GU is just bearish, overall, right? We know it's bearish overall. We know that it sells. However, it's just been on this, mighty strong uptrend, and it's been a delicious, mighty strong uptrend. So you can't really. I'm not about to sit here and predict the market, but I'm just going to sit here and, oh shoot, Joseph didn't even hear me. Yo. What's the last thing you heard?
Power problems from this side.
Okay, what's the last thing you heard?
Not a complete structure. The second leg of that M.
Oh, okay. So what I'm saying is on this daily time frame, you can see that, well, you probably didn't see that too. So on a monthly time frame, you can see that, it reached a certain market structure, right? But it didn't completely I think it still has to fill this wick. This is still showing bullish confirmation, on a monthly time frame. So I think it's complete this wick inside the zone, right? Which means on a daily time frame, I believe this market can pull back up and before it drops back off. Now, I was telling you before that Biden supports the British pound, the Brexit is like the rumor. And if that's the case, then, this bad boy is going to keep going up and the US dollar is going to continue to plummet, especially due to, the coronavirus on top of the stimulus checks. The more stimulus checks that's being printed, the more value of the dollar is going to lose. Right. Does that make Okay, cool. So like what I'm looking for a complete buy. A lot of people are looking for sales right now. They're looking for, a sell off this, market structure as an M to continue to go down. And although that could happen, in my opinion, I don't think that's really just going to happen just yet. I think what I'm looking for is like, this is an area of like support since it's creating, broke resistance, but it could come all the way down here. Yeah. And the rules. It can come all the way down here, break low, and then go back up. And that's what I'll be looking for. Now, as far as like my entries, the only thing that I look for in my entries is on the 4 hour. You see how the market was creating dojis, spinning tops, hammers, and all that. The sign of reversals, right? Well, I look for a bullish engulfing candle to engulf all these previous candles. And then right when it closes, that's when I look for my entry. You hear me?
Yeah, I do.
Yeah, so it's the same thing. Like, it's the same thing with the 1 hour time frame. Like people people tell me, well, Jonah, if you don't sell GU, why you sell? Well, because it started. What did it do? It started creating lower low, higher lows and lower lows, and so like the GU is no longer it's creating this channel, but no longer has that bullish push, no longer has that bullish momentum. And then once I saw that this bad boy these two candles completely engulfed, I mean, it's sell time. Now I got in on this candle because I knew that since it was completely engulfing these previous candles, then I know that it's reversal time. But I don't think it's completely done. And that's why I never really sell in a really bullish market. You only saw me sell like a couple of times. So that's what I'm looking for, man. I'm looking for buys around this area. However, it did hit a particular level right here, but it's breaking through. So I highly believe it's going to go down to this next level right here.
Hey, Jonah.
What's up, brother?
Hey, man, what's your typical like stop loss and stuff? Or do you take profits? Or I guess a better question is like, how do you manage your trade?
Oh yeah.
Like trailing stop losses, all that kind of stuff.
Oh yeah. Very simple. Very simple, man. Like, for example, I'm going to tell you a trade that I got in last time, trading down here. This trade right here completely engulfed this candle, place the trend line on this, markup. And then of course, like, when I'm looking for a retest, let's just say if I wanted to get on the retest, I wait for this to test the structure. Now I'm getting completely wrong right here. And if you really, really, really want to like, not miss this trade, shoot, that's a 4 hour time frame. Sorry, not the 1 hour. Looking at this wrong. So usually on the 1 hour time frame, you see how strong this bullish candle is.
Yep.
Usually I don't just enter on top. I wait for a little retest. Now, usually what I'll do is I put my stop loss right below the structure. Now, this is a 90 pip stop loss. There's no way that I'm going to put a 90 pip stop loss there unless I have a 0.01 in, right? So usually I put the stop loss right below structure or near the structure, because if a candle comes down that far, then I know that the market is doing two things. One, manipulating, and two, it's just playing around in that area, right? So what I do is I'll wait for a corrective structure. Every impulsive move has to have a corrective structure, right? That's why you never want to just entering the top unless you really want your stop loss down here. So I wait for it to come back a little bit for corrected structure, which, and then once it pulls back up, I put my stop loss right there. Now for this reason, if you're getting in on this structure right here that I broke, all right, you could have got in anywhere right here and put your stop loss. Oh crap, sorry. You could put your stop loss anywhere below here. So that would have been a 42 pip stop loss. Hey, shoot, even if you want to, because it's creating higher highs and that bullish candle is just telling you that it's going to keep going up, you could put 23 pip stop loss. This is actually something that that's what I did. I put like a 20-something pip stop loss. So anywhere below structure, especially if it's like creating those that bullish momentum after that crazy impulsive engulfing buy candle, then you can risk it for the biscuit right there. Because sometimes, man, it's not going to pull all the way back to the trend line. It's just going to leave you,
I got you.
Yeah.
All right, man, that makes sense. Because I kind of get stuck on the, even if the structure's like that, I'll always say, like, I don't like something deeper than a 15 pip stop loss. I just don't, so I try to keep them super tight.
Like so like tight stop losses are okay as long as the structure is clean, because the reason why a lot of people do tight stop losses because they're not willing to risk more than they can handle, and two, they want the most out of the market.
Right.
And three, usually is not off of a retest or anything. Usually the tight stop losses are at the very bottom. Honestly, bro, I try not to do that because there's a lot of fake outs. There's a lot of manipulation. They know people are buying the M's and W's. That's why I just said, you know what, man, until I see confirmation on my side, like even on a 15-minute, bro, even on the 15-minute, I mean, you see that this 15-minute candle is completely this is a 65 pip candle. There is no way the market, unless it's super manipulative, which it has happened a lot, it's just going to shoot all the way down to stop you out and then go all the way back up. Like the market really just doesn't do that. Usually when you see this trend line over here, there is complete liquidity zones, above this area as people that has been selling. So they're quickly trying to stop people out. They're not trying to get these sellers, opportunities to get back in the market. They want to that's why you always want to be on their side. So like if you want to wait for that confirmation and you find your stop loss wherever, see, that's the thing. The thing is, it doesn't matter where your stop loss is after the market is pulling in the right direction, because the market is not going to, like I said, unless it wants to play around and consolidate and stop people out, manipulate, there's liquidity up above. So the market is not going to get anybody a chance to get back in the market. It's just going to keep shooting up. So you can put your stop loss as low as here. You could put your stop loss as low as here. Now there's a W that formed right here. So you can wait for a retest. Obviously that didn't happen, but yeah, that's where I put my stop loss.
Yo, Jonah.
Yo, what's up, bro?
Yeah, can you touch something on risk management?
On what?
On risk management.
What's that? Risk management? What? I'm sorry.
Risk management.
Yeah, I don't know what that is. What is that?
Risk management.
Risk management?
Yeah, bro, he's saying risk management.
Okay.
I'm sorry for my English.
I think you said risk management. And I said, that must be a new term out here, boy. I said, boy, Forex is always updating. So I was talking, me and Elwin had a Zoom call, and he said, how do you enter the market? And I told him, I said, well, I enter the market, by the way, I just taught you guys. And he said, okay, like, what's your lots and everything? I said, well, I usually go in with 4 or 5.02s. And he said, why don't you just risk, 2.05s? And I said, well, because I know myself, I get greedy. The higher the lots go, the more greedy my emotions get. And I'm like, I can't do that. So I break them up. I do like 5.02s. Once I see that I'm $60 in or maybe $100 up in profit, I start taking partials. So what I do is my risk management is like I risk at least probably, you can say 10% of my account, 50%. Did I say 10% of my account? Hold on for a second. Let me do this. Let me do the math. Let me see.
10% would be deep, but hey,
I know.
if it works, man.
I got that wrong, bro.
But hey, if it's working for you, then it's perfect.
Yeah, I risk anywhere from 3 to 5% of my account. But here's the thing. I don't even pay attention to percentage anymore. I don't pay attention to the percentage of my account. I don't pay attention to how much I'm risking. I'm paying attention, not how much I'm risking. I'm not paying attention to like the lot size or anything. I'm paying attention to how much I'm willing to lose. Does that make sense? The percentage game is good, but what happens is like if you're consistently in the market and you know what you're willing to lose, lot size or whatever doesn't matter as long as you're saying you're willing to lose. If you're going to drop a 0.50 on a $200 account and you say, hey, I just want to risk 10 pips, well, there you go. You know, you risking $50 off of the $200 account. It's going to take what, 5,152, four times for you to blow your account. Even though that's over leveraging, you're willing to risk that, you know, and if you're cool with that, then go with it. You know, now I wouldn't recommend doing that. But like, to me, it's all about how much money I'm willing to lose. You know, can my stop loss be tighter? You know, can I do it with a tighter stop loss? You know, with a 0.50, you want to do like probably like a 5 pip stop loss if you really want to lose less. So that's how I look at risk management, man. I try not to get all into the percentage game, man. It just messes with my head. I think everybody's different when it comes to that. So it's all about how much are you willing to lose? You know, it's not about your lot size. It's about how much are you willing to lose? That's how I look at risk management.
Okay.
Mm-hmm.
Thank you, brother. Thank you.
Yeah, man. Because I look that, and that's what saves your account. You know, when I blew $400, you know, on a big account, when I was almost at $1,000 in my account, I got mad at myself because I said, like, where did I go wrong? And I said, well, Jonah, you got too confident. You over traded. You revenge traded with your while you're still overly confident, and then you didn't apply risk management. Those are 4 things that blew me. It didn't blow my account, but it blew me like right back to like the market told me to sit down. So like, you know, now I'm thinking, okay, just last week I won $200. Did I lose some? Yeah, I lost some. But I added up all my wins. I won $200. And I'm like, wow, like I didn't even realize I won $200. But adding up all my wins, I won $200 last week. All because I was doing the same thing over and over. Dude, I traded GU 4 times in a row and profited off all those 4 times. The market went up. I profited. It retraced. I said, oh, I know how the market's moving and retraced. I got a little bit of it. It went back up. I profited. And then that big drop happened last Friday. I was taking profit as it go. I said, look, the market's at $50, $60. I'm taking it all. Let that bad boy retrace and watch it buy right back up. I'll buy right back up. As soon as that's another $60. You know, that's another $50, another $60. And then when I lose, it's not that big. You feel me?
Yeah.
So my losses, risk management is also saying that my losses are very, very small compared to my wins. So you can lose 20 times, but if you win 30 times, those 20 times, the 20 times that you lost are small losses compared to your big wins that you won 10 times.
Yeah, sure. And also something, can you touch also on taking profits?
Yeah. Oh, okay. So like how I take profits.
Like a target fixed number of pips, like 20 pips, 30 pips, or are we talking in terms of zones, you know?
Yeah. So
are we following the price action?
Yeah. So for me, I don't look for pips because pips it gets me like wondering and emotion. You know, I'm like, oh, I'm 50 pips up. Should I keep holding? I don't look at pips. I look at zones. If I know that the market is going to particular zones, I'm holding my trade no matter what. If people say, hey, you should have closed it. I don't care. I'm holding it. I see it happen 9 times out of 10. Now I'll take partials, but I'm still holding certain trades to certain zones. So for example, you see right here, Let me see on the 4. I'm on a 4-hour. Okay. That's a big uptrend. GU might continue to fall a little lower than usual. So, for example, where did I have that trend line? Okay. So I had the trend line. Let me just delete all this. It's just like noise. Okay. So, for example, I had a trend line right there, right? Let's just say on the 1 hour, go down to 1 hour, and some of the entries I had right here. So now you got to look at whole numbers, okay? This entry was at 13696, okay? So let's just go ahead and bump it up to 137. Let's just say let's just say I entered at 137, right? This is where it gets very technical. So if you look at the 4-hour time frame, right? Let's not look at the weekly time frame. All right. The market was right there at the time. If I know that the market still has to come all the way up here, then I'm buying to quarter point levels. I'm buying to the whole number levels. If the market has to come up here before it reverses, right? It has another 500 pips to go. Then I'm going to look for zones to take profit at. So if I entered right here, right, at 137, you can look for zones, right, like this. Oh, I'm going to take profit here, okay? Okay, where's your next zone? You can take profit, here, all right? Now, if you back up, it's kind of hard to see where you can take profit in the past. So you just want to ride that bad boy up. Now, what if you're at a zone to where it just started creating new levels? Well, you look at quarter points, you look at whole numbers. So what I mean by whole numbers is this. If you enter that 137, the market is not going to reverse at a random number. The market usually reverses at a whole number. 138. All right, 138. And I told y'all that it was going to 140. And the secondly, I said it was going to 143. It's now at 142, my brother. 142. Watch this. All right. These are all zones, right? I entered at 137. The market went to 138. The market went to 139. The market went to 140. Well, that'd be considered 140 right somewhere right here. All right. So if you're swinging and day trading, this is how you do it. You look at the whole numbers. And bro, GU is going to do it. It's giving you 100 pips. Each zone is giving you 100 pips. You feel me?
Yeah.
So now if you were looking let's just say you was trading in the past, right? Let's just say if you was trading in the past, you was trading stuff like this. You say, John, I don't know where to take my profits. And let's just say you was waiting for a bust out and you entered right here in the market. Let's just say none of this existed. Well, remember your zones could be at levels of structure, okay? Where if you enter right here, you're not going to look at the low, you're going to look at the highs, right? So your highs would be, for example, like 1, 2, and let me zoom in a little bit. I'm looking at these. You see these mountaintops? I'm looking at these highs. Okay. And 3. And you'll ride that bad boy up. That's almost 500 pips, brother. And if you got in down here, man, I mean, that's a beast. So anytime you draw like your trend line or anytime you enter the market, look at the previous structure. And what is it telling you, bro? It's telling you that liquidity, if you entered right here, all these people selling, this trend line is not telling you just traps. It's telling you where the people are selling. So you have liquidity, sellers of liquidity all the way up here because why? This is where it started. This is where the sell-off started. So wherever the sell-off started, that's where your major take profit is if you're swinging that trade, you know. But you don't have to swing it. You can partially take partials as the trade goes up and up and up. If you're holding all the way down there, you know, you good. So that's how you do it, man. You could do this, dude. You could do this on a 5-minute time frame. Because I know you like trading a 5-minute time frame, right? Yeah, I mean, you can literally do this on a 5-minute time frame. You could literally look at this 5-minute time frame. Even let's just say, even if you wanted to sell the market, right? Let's just say you wanted to sell the market, even though I don't recommend you selling GU. Let's just say for the wholesale, well, which, you know, the market is going to eventually sell after a big buy. Let's just say you saw this shift happen and broke this trend line. You see it clearly retesting this trend line, right? Well, where will your take profit levels be once you enter right here? The lows. 1, 2, 3, right? Let's just say you entered right here. Take profit 1, 80 pips. Take profit 2, 123. Take profit 3, almost 200 pips. Dude, that's off the 5-minute time frame. And that's why, and dude, I'm not even using indicators. I'm not using any indicators whatsoever because to me, indicators, they're good. Indicators are good once it pulls out into the right direction. But I need to see market structure and price action. I need to see where the liquidity is, right? The only thing I use is the 200 EMA. And the reason why I use 200 EMA is usually the market maker EMA is what they say. And it's usually where the pullbacks happen. If you see how much it respects on a 4-hour, you see how much it respects this level on a 4-hour, that's why you can say, hey, you know, it's going to like possibly, you know, the market might come all the way down here and respect this bad boy before, you know, launching back up, you know, because usually that's when it respects the EMA before going back up. So yeah, man, that's where my TP zone is. That's where my TP levels is. And like I said, I don't wait for an EMA crossover. I don't wait for no RSI. I don't wait for nothing. I just look at clean market structure and candlestick confirmations. It's the last thing I want to say. You see this bullish engulfing these. I mean, I can literally put, Joseph, I can literally put trend lines on these things. And see, it does the same thing over and over again. But nobody wants to listen to that. Everybody wants to try to get in the market all quick. It just literally gives you all these confirmations to buy. Does that make sense? And the reason why people get caught up in losing is because they're trying to buy and sell the market. British pound, US dollar, right now. I'm taking what the market is giving me right now, not in the past, but right now, is on a complete uptrend. I'm doing nothing but buying this market. The reason why I sold this is because I saw this candle right here engulf this whole bad boy right here, including is creating lower lows. Okay, that's the only reason why I sold. Where's my stop loss? Right above this candle. And I took it all the way down to this bad boy right here. That's 170 something pips. It's really not that hard. So the way I've simplified my trading is I stopped trading both directions. I only traded one direction. So if GU's not giving me a bullish up, if GU's not giving me this corrected structure in order to buy, I'm not buying. You know, if you see this bad boy's coming down, well, it's giving me corrected structure. I don't care if it's an M or not, it's giving me corrected structure. Once I see this bad boy like probably come down right here, play around, bust out a little bit, and then go up again, it's the same thing. Trend line right there, stop loss right here, below here, whatever you want to get. And then look, take my TPs right here, take it to the next level, quarter point zones, you know, whole numbers, whatever you want to call it. And I just keep doing the same process over and over again. Now, the last thing I want to say is I've done this only with one pair, and it's GU. And GU has been treating me really good. And everybody's telling me to trade all these other pairs. Why? I'm making my money off of one pair. I don't understand that. I don't understand why people say that, you have to trade all these pairs. If you want to swing trade all the pairs. But this one pair is helping me. That's why I understand how it moves. Does that make sense?
It does.
Yeah.
Yeah, I agree with you there. Sticking with a few pairs helps you to concentrate and even to know how a pair moves,
Right.
And like how a pair reacts to certain levels. But I've been having problems holding my trades. I get out of break even, though I had an opportunity of getting out at 30 pips. So this month my account is there. Up, down, up, down. There's no movement at all. So I hope I'll apply the TP zones,
Right. See, I don't do break evens unless the market is, for example, if I entered right here, right? Let's just say I entered, which would be very late.
Yeah.
And let's just say, the market is right here. No, excuse me. Let's just say the market is right here. And I say, I'm gonna move my stop loss to break entry, break even. Why would I do that if the market just completely just engulfed when it can come back up to retest and knock me out? See, here's the thing. The reason why they're hitting you out and break even is because they know people are moving their stop losses to break even. If I was you, that's why I said, like, stick to your plan. Lose what you're willing to lose, because the more that you keep your stop loss at a higher rate, the less likely you'll be stopped out at break even. Now, when it gets down here, right? Now you can move your stop loss at break even. And this is where I would say this, dude. If you're looking on the 15-minute time frame, right? This is an area where it should have retested, right? So anytime the market does this and then pull back and then go down, then you can put your stop loss above that structure. Why? Because it's creating obvious level structure. If it does this, pulls back and then comes back down, okay, then you can put your stop loss right there. All right. If it comes back, like, again, pulls down, put your stop loss right there. Wow, because that's structure. Once it breaks structure, that's when you know that it's going in a completely different direction. So that's how you move your stop loss. Don't move it. If you sell this and you don't see no pullback and then drop, dude, trust me, don't put your stop loss at break even, because they know that people are doing that. Okay. Yep. That's how I learned how to not get stopped out break even. I see so many times to pull back, my stop loss be up there. I'm just be chilling, bro. I just be chilling. The market just keeps going up. And then once that bad going up, it's time for me to stop loss.
Whenever I see a pullback,
I
get this rush to close my trade,
Right. Now, when you're scalping, you don't have it doesn't matter how the market is moving, your break even or anything. When you're scalping, you have to have break evens, because you're not trying to lose. And scalping, you're trying to get in and out. But that's why, dude, I trade like 1 or 2 pairs. Like, the reason why I got gold is because I'm learning how to scalp trade right now, like real scalp. And I made $149 in 2 hours, dude. I only had 3 losses and like 8 wins, right? Or I think 7 wins. I can't remember. Something like that. 6 wins. It could be like. So, like, I stick with 2 pairs, bro. If I don't see my setup, I don't trade. That's what saves you from losing. And I know, dude, I know it's hard. But that's what saves you from losing. If you need me to do you want me to create another link if you got more questions? Because it has 1 minute left on this.
Yeah, you can. Just
okay. All right.